So let's take a look at FICA taxes, and which are comprised of Social Security and Medicare tax. Social Security, otherwise known as OASDI, Old Age Security and Disability Insurance. Oh gosh. It's a bit much to have to erase. But, oh well. Okay, so Social Security and Medicare taxes, I'm gonna kind of go through this quick because you guys already know about it. We've got the employer portion, and we have the employee portion, and it's shared. So for OASDI, Social Security, and Medicare, the percentage is 6.2, I'm sorry, 1.45. Again, 6.2% that the employee is gonna pay, 1.45% that the employee is gonna pay. Total of these is 7.65%, 7.65%, 15.3% in total that's going to be paid. So 2.9, and you should be familiar with these percentages. These are also the, self-employed tax percentages, and 12.45% in total. Now, recall, OASDI has a wage base. So it's only applied on wages up to 100, this is for, what year are we using? Yeah, okay, so 160,200. This is our wage base for OASDI. So once you reach that wage, just like with the self-employment taxes, we went through this, you're not gonna have to pay over 160,200. Now, for employers, it really only pertains to what the wages that they pay, right? They don't know what the employee is made elsewhere. So they're gonna apply that $160,200 wage base only to the wages that they have paid that employee, right? If the employee's out there earning wages from someplace else, or has self-employment earnings, or started the year at another job and now they're over that wage base, the employer doesn't keep track of that. They're only concerned with the employee's employment at their company. Medicare has no wage base, right? So it goes from 0 to infinity. It's applied to 0 to infinity, only to wages though, of course. But then we've also got the additional Medicare tax, only applied to employees. It is 0.9%, and this is on wages over 200,000 from the employer's perspective. Now, if you recall, when we talked about the additional Medicare tax, I think we talked about it in chapter 6. If you're married filing jointly, that threshold is actually 250,000. If you're married filing separately, it's 125,000. But from the employer's perspective, once again, they don't know what your situation is, the employee's personal situation is, so they're going to start applying this once wages reach $200,000. So if the employee has paid in, so if they're married filing jointly, and they've got this additional Medicare tax that has been applied, maybe they made $230,000. So the employer started applying it at $200,000, so $30,000 of income has now been subject to additional Medicare tax, but they're married filing jointly. The threshold doesn't start for them until $250,000. That means they're gonna get that additional Medicare tax back when they file their income tax form, okay, because they've been over withheld on the additional Medicare tax. Let's see, and this has no match here. The employer doesn't have a portion of this. This is only applied to the employee. there any questions about the Social Security and Medicare tax? No? Okay. Tips. Now they've got $20 here. I'm not sure if it's 20 or 30. This is always an issue. I think the other do you remember, Kathy? Did we say 30? I can't remember exactly either, so anyway, just go by what the book says. $20. So if an employee receives $20 or more in tips in a month, then they're considered to be a tipped employee. If you recall, there are certain, when we're talking about the minimum wage, there are certain requirements for the employer to pay. Like the tips can make up a certain amount of the hourly wage when we're talking about the minimum wage, but we're not going to get into, I don't think we get into that. Gosh, I hope we don't get into that. No. Okay. Employers, though, from a payroll perspective, employers will oftentimes allocate tips. So this is for large food and beverage establishments. That would be somebody that has more than 10 employees on a typical business day during the preceding year. That I wouldn't really call that a large food and beverage establishment, but that's the definition here. What they do is employees don't report tips. If the employees do not report tips in an amount of at least 8% of their gross receipts, so if the employee sold $1,000 worth of receipts during the month, and they didn't report to the employer that they had at least $80 in tips, the employer must allocate the difference to the employee. So the assumption is you're making 8%. It's to make sure that people will claim at least some of those tips. Tips are really easy to evade taxes when you're a tipped employee, right? So the employers are required to report allocated tips then in that case. They can allocate using gross receipts as the example that we just used, using hours worked per employee or some other method that the employer and the employee agree upon. They do not withhold income, Social Security, or Medicare taxes on allocated tips, but it is reported as income on the W-2. Okay, so the employee is going to have to pay tax on those allocated tips at the time that they file their W-2 form, but the employer does not have to withhold.